Okay, we are still here. Hello guys, we are live, we're streaming, and let's start our weekly webinar. This is my first webinar, and weekly stock market webinar will hold every Wednesday at 6 o'clock by Spanish time, 7 o'clock for Northern Europe. I think GMT is 5. My name is Fred. I'm a trader, asset manager, analyst, author of hundreds of publications and articles. And so today I'm here to show you, to show you what's happened on the markets, what we have for next week. Big news, big events, the most important things to discuss, from GameStop and AMC to some Apple shares, Fed Reserve meetings, inflation, macro, all you're interested in are here. Okay, let's start. I have some presentation for you. Choosing my file, okay, here, it's here, and changing my screen. Okay, 1 minute. Here on your screen, my weekly presentation. Let's start. First of all, it's me, and I live in Spain, and I'm trading for my own account. Also, I'm asset manager for my clients. Mostly they are friends, fools, and FFF. You know what is FFF? Friends, fools, and family. Okay, except family, I have everything. All groups invested to my account, to my hedge fund. Let's call it hedge fund. Okay. So topics for today: ARK Invest. Do you know Katie Wood? She's actually #1 asset management woman. She's #1 for today. She's ARK Invest CEO. And I would say you can ask every millennial investor, every millennial speculator, he knows about Katie Wood. Also, Amazon, Tesla reports, actually 2 weeks ago, they reported Q1 reports 2-3 weeks ago. But now I think we have some signals to buy or sell. I will show you what. So let's start. What shares does the ARK Invest portfolio consist of? Actually, mostly, if we're talking about ARKK fund, this is ETF traded on NICE. ARKK is innovation fund. Mostly, or actually almost all stocks inside of this portfolio is about innovation, about future, about what we'll do next 10 years, technologies, everything. So let's check what's inside. Actually, giant companies, big companies, the biggest companies, 23%, large companies, 27%, and mid companies, 27%. So except 20%, fund includes mostly big and mid companies. And so if we're talking about volatility, companies inside of this fund mostly highly volatile. Okay, liquidity good. Okay, they are liquid, very liquid. Size somewhere here. Almost here. It's shown that the companies are giant and large, but size of ARK funds, ARK companies somewhere here below mid, between large and small, close to small. I don't know why, actually. I don't know why. Here, it's written that giant and large are 50% of portfolio, so we have to be close to large. Okay, forget about it. Probably some mistake by Morningstar. By the way, this is morningstar.com information from their website. Okay, so quality. I don't care about quality because everybody should think about his own quality. Okay, they say that it's close to high. Okay, momentum. Price of this fund at that time was somewhere here, now somewhere here, because they had a huge down draw and they have a huge correction from highs, from peaks. Yield, oh my god, yield should be negative for this year, but fund created, designed not this year, some years ago, 2 years ago, and we can see what it did. Also style, mostly growth. We have on the market growth companies, growth stocks, and value stocks. These shares mostly growth, so they're dynamic, innovation, growth stocks, not value, not like Coca-Cola, Pepsi-Cola or something. Okay, so let's go. Next one, distribution. ARK Invest has mostly has communication service industry stocks inside of this fund, inside of this ETF, mostly from these sectors, this industry. Actually, it's sector, not industry. Technology, 24%. Healthcare, yes, healthcare, mostly biotechs, mostly some, actually biotechs. And small portion is somewhere here, consumer cyclical. It's about Tesla probably. Okay, so most companies from this ETF involved or from United States, 81 or 82%. Some from China, Telnet and some companies, Switzerland, Canada, Singapore, and mostly 95% from these 5 countries, and mostly from United States. Okay, let's check the biggest allocation of this portfolio, ARK Invest portfolio. And remember, it's not just ARK, it's ARKK, because they have a lot of funds, some 4, 5, 6. We're discussing ARKK Innovation Fund, okay, ETF. 10% Tesla, about 10%, not 10. Teladoc healthcare, 5%. Roku, it's some streaming company. Square, some financial. Shopify, e-commerce. Zillow, real estate. It's between technologies and real estate. Zoom, we are now in Zoom. Actually, we are in YouTube, but I'm translating by Zoom. Okay, Spotify, Sweden. Or Switzerland, I don't know, Switzerland probably. Yeah, it should be from Sweden, probably registered in Switzerland. I'm not sure. Baidu, Chinese company, and so on. Okay, let's check. It's continuing of our table. Twilio, Zoom, a lot of companies inside. Let's check the nature of this company. Sustainability rating is 96, enough good, 96. So environmental score here, social score, you have to know what is ESG. If you don't know, ESG is environmental, social, and governance. It means that you are friendly for environment, you are friendly for social. I mean, you have enough women in your board of directors, for example. Also governance, your board of directors should be diversified. Social, also it's about social aspects of your governance, of your activity of this company. So social score enough high, ESG score enough high. What about this sustainability score? 27 and 26 current historical. Score is about middle, not high. Look, somewhere here. I don't know why, because she's a woman. She likes technologies. She likes some even crypto. She likes some green companies. I don't know why her score still somewhere mid. Okay, it's not my decision. What she likes in her ARK, deep learning. You know what is that? Even TikTok, your TikTok is deep learning. Do you know why TikTok is so valuable? Because they have an algorithm inside, and this algorithm IE, so driven by IE. So that's why this IE better than Instagram algorithm, Facebook algorithm, Google algorithm. This TikTok can find direct, I would say, niche, direct audience too close to your product. It's the best. That's why it's very valuable. So deep learning should be in 2020, was in 2020 like this, 13 trillion. This is internet, and deep learning is 2 trillion. In the future, internet will be 20 trillion. I mean, capitalization, okay, market capitalization of companies, internet companies. But deep learning will be more than internet capitalization. I don't believe in that, but I don't believe in this because nobody knows future, especially 2037. But okay, this is view from Catherine Wood, and we're discussing her ARK fund. That's why let's just check what she thinks. Okay, next chart, IE chip market. Okay, as you know, now we have some deficit on IE market. So that's why I have here some TSM in my portfolio, Taiwan Semiconductor. I have some AMD, except NVIDIA, I have all shares, all cheap shares in my portfolio. And I believe that after some correction, we will go higher. We will even reach some new highs probably. Okay, that's why I'm keeping this. I will show my portfolio, my own portfolio. I will show my client's portfolio also. Probably not today because we have just 10 or 15 minutes. We have to close today's topic and we'll discuss this ARK, mostly ARK. Okay, let's check chip market growing, especially with this deficit. It will grow in the future. Intel, but unfortunately Intel is the last company I would buy from chip industry because they're losing their technologies, they're losing their leadership. They lost already their leadership because check here in 2020, mostly all chips were like this, x86, Intel x86, let's call it x86. These chips were mostly from Intel, from AMD. Just in 4 years, we will have ARM architecture. You know, this is some structure how they created. ARM almost 60%, and old style chips will be 41. Okay, but in 2030 story will be more. You know, ARM aggressively will go higher to almost 82%. This is again prediction from Cathy Wood, from her stuff, from her hedge fund. Let's call it hedge fund. Actually, it's not hedge fund. Global virtual gaming revenue. The same story. She likes this shares, the stocks in her portfolio, and she thinks that virtual gaming will grow aggressively. Again, you can see in this chart. Again, this forecast from Cathy Wood. This is augmented reality, AR. We call it AR. The same story. Look. Now, this one is now. Okay, no, this one is now. And look, perspectives for this industry. You know, too much growth she expecting. 130 billion by 2030. Okay, let's see. We'll see. Global gaming market also growing. Global AR VR market size also will grow dramatically, aggressively. Okay, so that's why she added so many growth shares to her portfolio. Okay, it's risky, right? I will show you chart, and this chart looks not like winning chart. Okay, this chart little bit, not little bit. Enough risky. Some 30-35% discount from highs, from peaks. I don't like investment like this. If you have 30-35 discount, 30-35 correction, oh my god, it's enough. It's too much, I would say. So okay, let's go. We are not we're just considering, we're just monitoring, checking what's inside of her portfolio. Let's go. Digital wallets. Also, she like it. Digital wallets. We can check here. Do you know any from this? Please write in the comments if you use any from this list. I know Sophie. Okay. It's not a girl. It's some wallet. Sophie. I know some Revolut. N26, especially very popular in Spain. I don't know about African payment systems. In China, in Asia, Alipay number 1, PayPay, and WeChat. Actually, 2 leaders here, WeChat and Alipay, most popular wallets in China, in Asia. Okay, let's go. Yeah, it's not so important. Okay. Unsecured consumer debt in US. She's talking about debt. She's talking about digital wallet, banks, Bitcoin. She likes Bitcoin. Me not. You can unsubscribe if you subscribe. If you don't like people who doesn't like Bitcoin. I don't like any crypto in finance markets. Okay. I like crypto and blockchain. It's technology, great. We will use it probably, but I don't know why it's still not using. But I don't believe that Bitcoin or any cryptocurrency will be the future of financial world, and we will use not banks. We can use not banks by digital wallets, but I'm not sure that we will use in financial system widely, especially governments will let us to use some cryptos. Because I will explain you later, not today, in next week or later in my webinars, why I'm absolutely sure with 20-year experience, I believe that crypto is not a monetary policy tool. It's impossible to regulate economy with crypto like a dominant currency. Absolutely impossible. So we will have at next crisis, not printing money story, not inflation story. We will have greed, depression story. I don't like this. Okay, so let's go. So Bitcoin at 500,000 is some utopia, is some I don't know. I don't believe. If you want to bet with me, okay, let's bet. Bitcoin continues to gain credibility. This story is about March, February, January. It was written by Cathy Wood. Not now, not in June, not in May, even in April. It was written and analyzed probably in 2020. So now something changed. Permissions given to ETFs or something not will be given to currencies issued, printed by private companies. Check the China, okay? Just 2 weeks, 3 weeks ago, why Bitcoin crashed. China said no, thank you. We will have some Bitcoin, some crypto, but it will be government issued cryptocurrency, some digital yuan. And I'm expecting soon, very soon, from the United States the same story. They will tell us, probably in my forecast, okay, I think so. They will tell us that no private cryptos in financial system. And we're working on a digital dollar. They're working not so hardly. They're just researching, not like a China. China is doing something very fast, very aggressively researching and implementing this digital yuan. But United States, very slow in this, because United States dollar is number one currency in the world. It's impossible to change something too fast, and maybe it's not necessary, okay? So my prediction is soon United States will say no, like China, and Bitcoin will crash to another 10,000 down, okay? Just let's remember. Automation, self-driving, actually, yes, this is a big industry. Although Tesla crashed, some Teslas crashed 2 or 3 weeks ago. It's bad news. Two men died. But anyway, I believe, and I think most people believe, that we will have self-driving cars in some future. We will have some drones bringing us some boxes from Amazon, for example, and it's really future. Why? For example, with the Bitcoin, I'm not sure in some good things in financial system. Costs, it's the same. If you think that with Bitcoin you will pay less cost for transferring money, it's not true. With cars running by AI, I believe, and probably most people believe, that crash will be some rare thing. We will have less crash. I'm not sure in my English. Probably I'm talking a little bit not because I'm not native. English is my even third language. Okay, I speak 4, and English is my third language. So okay, but I think you're understanding what I'm trying to say. AI drive more securely than human. It's a fact. Check Google AI, check Tesla AI. Crash. If you compare with humans have more crash. So it's a future probably in some probably she has some information about when we will drive these AI cars. Okay, million units 2025. Here's some information. Electric vehicle leaders develop innovate battery. It's about battery. No, it's about battery. Okay, some 10 years ago, batteries were most expensive part of Tesla. Very expensive. Now, price of batteries declining, aggressively declining. And look, here's some information about how many times it will be cheaper in the future. Okay. So let's go to self-driving cars. She's writing about what? 2025. Cost per mile of a personally owned vehicle. Okay, 70 cents. Yeah, mostly because you spend some money for petrol, for gas. Here, self-driving cars, 25 cents. Mostly because of electricity and because of systems controlling these cars. Infrastructure probably. Just okay. Let's go. What do we have here? Estimated operating earnings. Yeah, okay, forget about earnings. Delivery revenue. Drone. It's about drones. It's about revenue. I believe that if you're living not in a city like New York, if you have some home, it's logic that you have to get your boxes by drone, not by postman. Okay, that's why it's not a future, it's reality now. Amazon started to use. So let's miss this slide because it's already here in reality. By the way, I bought Amazon shares also. Let's miss something. Resume. Let's resume it. Deep learning can create more economic value, more than internet. End of the Intel 86 era. So, but one good news, I still have some good news. Okay, Intel just started to construct some factories in Arizona, and I strictly believe that they will construct new chips. Probably it will be Intel 86, but it will be the same capacity, the same, how to say, power like ARK, I believe, because you have to be stupid if you want to construct 2 factories for $20 billion in Arizona, and you still have some out of date technology. I don't believe in it. Intel has some plans, probably. Actually, in-app purchase revenue could grow. Okay. Income from bank interest and credit cards will fall by more than 25%. Actually, yeah, it should be like true, because costs are going down, banks closing their branch, I mean physical branch, and so they will decrease their costs because they will spend less to branch to people working in this branch. Okay, I'm not sure that we have so much time, but also it was the Amazon statement a little bit out of date. That's why let's miss it. Just check why I bought Amazon. Their numbers, their statistics, their earnings, enough good right now and will be better in the future. This is forecast from a company, okay? They believe, look charts. They're growing, they're exploding the market, look. Okay, that's why I believe this monopoly will be bigger. Yeah, some bad news from the government, from the United States. I think it was Washington, D.C. or another state. Now they have some case against Amazon. We'll check. Also Tesla, but vice versa. Tesla for me is a little bit, I would say, I'm not optimistic on Tesla. I think $500 is a maximum, is a good price or average price I would pay for Tesla, even less. I think 400 is better, 300 is better. I am not ready to pay $600 per share for Tesla because first, they don't have profit still. Second, it was very popular and more cash flow inside, so it's like a bubble. Third, they have what? They have competition. The number one problem for Tesla is competition. They are still managing like middle company with some profit from ZEV. You know what is that? Zero emission vehicle credit. They are making profit from some Bitcoin, and also Elon Musk personally doing some things like, writing tweets about Dogecoin. If I was some Tesla shareholder, I would say him, hey, Elon Musk, stop doing these things, okay? You are a genius. You are doing a lot of good things in engineering, in automotive engineering. Please do what you can do better than this Dogecoin, these jokes. Oh my God, stupidity. Okay, so let's continue with let's resume. Let's check what I'm trying to say. ARK, very aggressive fund. Growth stocks inside are too risky. I would buy it with another 20-30% discount. Amazon is some old school share growing aggressively. If they win this case in a court, I would buy more. But for now, they have risk. And also Tesla, I'm not ready to pay $600 per Tesla. Probably 400 is a good price. Some fair value, because they don't have any profit and competition aggressively growing. It's not good for Tesla. Okay, guys, this is my first webinar, and here I try to show you what I'm thinking about particular topic in ARK, in Amazon, in Tesla. And every Wednesday, you can subscribe to my channel. Every Wednesday, I'm here the same time with the new events, with the new topics for discussing, with the new ideas, with the new trades. I will show you my portfolio. I will show you what I'm monitoring, researching, investing. Okay, so good luck. See you next Wednesday.